Welcome to the deep dive. Today, we're jumping headfirst into, well, one of the most volatile spaces out there, pure play quantum computing stocks.
Yeah, it's a wild ride. We've used a stock screener, filtered for computer hardware, really zeroing in on these pure play companies. The ones banking everything on quantum
And the mission today.
is to really break down the top three by market cap and volume. We've got Rigetti, that's RGTI, D-Wave Quantum, QBTS, and IONQ, IONQ. We'll hit the fundamentals, the technicals, which are pretty dizzying valuations, and the news moving them.
Okay, let's do it. But first, just a quick reminder for everyone listening. This is all based on public data. It's purely for educational, informational purposes. Think of it as a journalistic analysis.
Exactly. No financial advice here, just digging into the data. And we've got a fun little challenge, too.
Oh, yeah.
For each stock, we'll calculate what would happen if you hypothetically invested $5,000 right at its 52-week low. It really highlights the sheer scale of the moves we're seeing.
Okay, $5,000 paper money challenge. I like it. Let's unpack Rigetti first. RGTI. Big market cap, right? $12.84 billion.
Yep, significant size, full stack quantum computing services. But the financials, that's where things get really interesting, or maybe alarming is the better word.
Alarming how?
Well, the high-risk profile is just baked in. Look at the earnings per share, the EPS trailing 12 months. It's negative $1.76.
Okay. Losing money per share. That's common in high-growth tech, maybe.
It is, but the margins here are just something else. The profit margin is negative. Get this, 2,079%.
Like negative 2079%?
Yeah, and the operating margin, negative 976%. Even the gross margin, what it costs just to deliver the products or services, negative 39.99%.
So they're actually losing money on the core delivery, even before overheads.
That's right. Fundamentally, it shows they're losing money with every single transaction, basically. They're betting heavily that the tech will eventually make it profitable.
And yet the market valuation's huge. That price-to-sales ratio, 1620.
1620.62. It tells you investors aren't really buying the current business. They're buying the dream, the potential moonshot, maybe, valuing every dollar of current sales at over $1,600 in market cap.
Wow. But they must have cash to burn through at that rate.
They do. That's the flip side. Look at the balance sheet. Liquidity is strong. Quick ratio, current ratio, both are 41.57. That's their runway. It means lots of cash relative to short-term debts. Crucial when you're bleeding money like this.
Okay, so cash on hand. Now the technicals. This stock's been like a rocket, hasn't it?
Oh, absolutely. A total rocket ship. The one-year performance is almost unbelievable. 293.36%.
Nearly 3,000% in a year.
Insane, right? But that kind of vertical climb means massive volatility. Right now, it's actually pulled back a bit, trading below its 20-day moving average, the SMA 20, by about 5%.
So short-term momentum's slowing.
Yeah, little breather. But the longer trend, still way, way up, massively above its 50-day and 200-day moving averages.
And here's something interesting. The current price, around $39.60, is way above the average analyst target price of $25.86.
Classic sign of market euphoria, maybe. The prices run way ahead of what the pros were expecting. News-wise, that recent surge and then the pullback, it was tied to those reports about potential U.S. government investment.
Which were then denied, right?
Correct, denied. But it caused a lot of churn, high relative volume, about 2.24 times normal.
Right.
And interestingly, quite a bit of insider selling during that hype. Net transactions were negative 23.83%.
Management taking some profits off the table during the excitement. Okay, let's do the paper money math for RGTI. $5,000 investment. The 52-week low was?
A stunning $1.06 per share.
$1.06. Okay.
So $5,000 at that low point would hypothetically get you 4,716 shares.
Right.
Hold those shares until the recent close of $39.60.
Right.
And your $5,000 turns into roughly $186,850.
Wow. That's a paper profit of over $181,000.
Yep, $181,850. That's the kind of explosive potential and risk we're talking about in this sector.
Incredible. Okay, let's move to D-Wave Quantum. QBTS, market cap is a bit smaller, $10.62 billion. They do quantum computing as a service, cloud-based.
That's right. And they share some of that high-risk DNA, EPS is negative $1.05. Profit margin also deeply negative, minus 12 and 63%. But D-Wave has a really interesting outlier.
What's that?
Their gross margin. It's actually really high, 82.46%.
Whoa, wait. 82% gross margin compared to Rigetti's negative 40%? That's a world of difference.
That's a huge difference, isn't it? It suggests their actual delivery model, the cost of providing that quantum service via the cloud, is pretty efficient. Even though they're still losing money overall because of massive operating costs, they make a good margin on the core service itself.
That seems fundamentally important for the long run.
I think so. It's a vital sign for potential sustainability down the road. And they're growing sales quickly, too, up 41.78% quarter over quarter. Plus, strong institutional ownership, almost 50%. The smart money seems to like the story.
Okay, and technically, similar explosion.
Oh, yeah. One-year gain, 2466.94%. Also incredibly volatile. Beta is 1.48, meaning it moves about 48% more wildly than the market overall. And the ATR, average true range, is 4.33, suggesting big daily price swings are normal.
And like Rigetti, it's correcting a bit now.
Yep, down about 7% below its SMA 20. Short-term pullback within a massive long-term uptrend. But here's something notable. The analyst recommendation. It's a perfect 1.00.
Which means?
Strongest possible buy rating. Unanimous buy, essentially, from the analysts covering it in this group.
Interesting. But like RGTI, its current price is also above the consensus target.
That's right, trading at $31.06, while the target is $26.30. Another case where the market momentum seems to be ahead of analyst forecasts. News-wise, they also got caught up in that government stake report in denial.
Right.
But they also had some solid positive news, a $10 million deal with Swiss quantum technology SA. Insider selling was negative here too, but less pronounced than Rigetti, minus 14.36%.
Okay, let's run the QBTS $5,000 challenge. 52-week low is even lower.
Yeah, just 98 cents.
Okay, 5K at 98 cents gets you.
5,102 shares.
And if you sold those at the recent close of $31.06.
That $5,000 becomes about $158,476.
So a paper profit of roughly $153,500. Still absolutely huge returns from the low.
Exactly. Same ballpark of spectacular gains, just slightly different numbers.
All right, on to our third and final stock, the biggest of the bunch by market cap. IONQ, ticker IONQ, $20.63 billion market cap. Focuses on quantum computing and information processing. So we had RGTI as maybe the pure spec play, QBTS as the efficiency outlier. What's IONQ's angle?
IONQ is definitely the revenue growth story in this group. Their sales quarter-over-quarter growth was massive, 81.83%.
Wow, over 80% growth in one quarter.
Yeah, huge acceleration. Shows they're really gaining traction, signing deals, getting customers. But it's a big but. The gross margin is tiny, just 1.14%.
Only 1.14% gross margin. So they're selling a lot, but barely making anything on each sale before other costs.
Pretty much. The operating margin is also really bad, negative 670%. So yes, tons of revenue growth, but it's coming at a very high cost, at least based on that gross margin figure.
How does the valuation look, price to sale?
It's 393.87. Still sounds astronomical, right? But it's actually way lower than RGTI's 1600 or QBTS's implied PS if you factor in its market cap.
So the higher sales volume makes the PS ratio look less extreme, relatively speaking.
Exactly. The market is giving them more credit for the actual sales they're bringing in, even if the profitability on those sales is questionable right now.
Technically, anything stand out?
Volatility. It has the highest beta of the three, 2.61.
Whoa, 2.61. So it moves more than 2.5 times as much as the market.
Potentially, yeah. Very reactive stock.
Yeah.
And it's seen a deeper pullback recently compared to the others. It's trading below both its 20-day and its 50-day moving averages.
Suggesting the short and medium-term momentum has really stalled out?
It seems that way, yeah. But again, the long-term picture is still strong, up 302% over the past year and still well above its 200-day average. But here's the key difference, the really interesting signal for IONQ.
Okay.
Unlike RGTI and QBTS, which are trading above their analyst price targets, IONQ's current price, around $59.37, is actually below the consensus target price of $64.62.
Ah, okay. So analysts actually see some immediate upside potential from the current price just to reach their average target.
Precisely. That's a strong technical distinction from the other two. It suggests, according to analyst models anyway, that there's still defined room to run before hitting even their current expectations.
Got it. And catalysts. What's been driving IONQ?
A lot of focus on their technical achievements. They announced a landmark result, setting a new world record in quantum computing performance. That's the kind of concrete progress news the market wants to see in this space.
Makes sense. Any downside news?
Well, they had the most significant insider selling of the group. Net transactions were negative 34.44%, a pretty hefty outflow.
Okay, let's do the final $5,000 challenge for IONQ. The 52-week low was higher.
Yes, significantly higher at $14.07. Reflects its larger size and maybe less extreme pessimism at the bottom.
So $5,000 at $14.07.
About 355 shares.
Yeah.
Fewer shares because the entry price is higher.
Okay, 355 shares. Sold at the recent price of $59.37 and gives you.
Roughly $21,070.
So a paper profit of about $16,000.
That's right. $16,070. Now, obviously, that's smaller in absolute dollar terms than RGTI or QBTS.
Yeah, much smaller.
But the percentage gain from that 52-week low is still impressive, 321.96%. So less absolute gain from the bottom, but still a massive return, maybe with slightly less perceived risk given the higher low point.
What a fascinating sector. It really feels like traditional financial metrics just don't apply in the same way here.
They really don't, do they? When you boil it all down, you've got universal negative profits, these absolutely astronomical price-to-sales numbers, but coupled with truly staggering technical performance gains from 300% to nearly 3,000% a year. And the market is just hypersensitive to any news, right? Technical breakthroughs, whispers of government interest.
And that key difference we found with the analyst targets seems really crucial. RGTI and QBTS flying high above their targets, suggesting euphoria, maybe overextension.
Could be. While IONQ is still below its target, which implies, at least according to those analysts, there's potentially more immediate upside runway built into the current price.
So connecting this to the bigger picture for someone watching this space, it really forces a tough question, doesn't it? In this pre-profit, high-growth world with huge losses and crazy valuations, what matters most right now?
Exactly. Is it the kind of operational efficiency and better gross margin we see with QBTS? Getting the core economics right early? Or is it just raw, massive top-line sales growth like IONQ is showing, even if it's not efficient yet?
The efficiency path versus the sheer growth path.
For which one ultimately proves more sustainable in quantum computing? Which story do you think holds more weight? That's really the critical question to ponder as you do your own deep dive into this electrifying and incredibly volatile part of the market.